when you're looking for like day trades, you're going to be looking at things in a different way. So we want to be like looking for stocks that have big range, stocks that have big ATR. That means average true range. So beyond that, when we scan for stocks intraday, it's a little bit different. So like intraday, when you're looking for like day trades, you're going to be looking at things in a different way. So we want to be like looking for stocks that have big range, stocks that have big ATR. That means average true range. Does it? Okay, so I'm about to make some cash is what you're saying, John. Man, I screwed up on that too. I had like 5,000 of those like 3 weeks ago at 33, 31, something like that. And I sold my last ones at 50 and I got to chase this thing back up. It's really a shame. So when we scan for intraday, we were asking ourselves, okay, is there a catalyst? Does it have a move for potential more? Does it have a history of making moves? So now these are like the scans that I use every day. So I'll kind of go over these with you guys. So if you're looking for in detail, so if we're looking for stocks that are just trending, so you're talking about like stocks, right, that are like your hot stocks of the day, of the months. I use a trender over moving averages scan. That's a scan that's essentially telling me what type of stocks are trending that are above their major moving averages. And I'll show you how to look at those in a second. These are great for locating swing trading setups with bullish trending stocks. Then I use a 90-day, 30-day, 5-day Momo scan. That looks for stocks that are trending in the last week to month to 3 months. Use this for building out our day swing trading watch list for like stocks that are in play, like they just had like the hottest heat on particular time frames. Then I have a liquid gainers and top losers scan. That's going to tell me like, okay, what are the stocks that are up the most today? And what are the stocks that are down the most today? Why that's important is those are going to be your best day trading opportunities because they have so much range. And then we use a pre-market gap scan. Finding stocks that are gapping up on strong pre-market volume, which will have the potential for great trading opportunity. So stocks that have news out, guys, they typically gap in the morning. So what I mean by that is like they gap because they have some news out. So like stock is at $40, maybe they got approved for some vaccine or something by the FDA. So the next day, right, it's at $45 in the morning when you wake up. So it's gonna show a gap. So I want to run a gap scanner because it's going to show me what are the type of moves. So let me like go into like a specific, the specifics of it. So when I think about these things, I have essentially, right, like a pre-market watch list, and it's not pre-market right now. So like it won't show anything. So it's going to show just the post-market moves. But the big hairy but in the morning, like this will show like a list of all stocks with their volume that are moving around in the pre-market before the market opens. It's going to show you what stocks are gapping. And we can take a reasonable assumption that those stocks are going to have some type of news out. Beyond that, I've got a handful of other things that I like to use. So I use a liquid gainer scan. Stocks will start firing off on this when they start making powerful moves with big volume. So then, I'll have alerts coming out like when stocks are essentially doing these kind of moves. Why is it important? It's important because we want to be in the biggest movers possible, right? It's not about small caps, big caps. It's not about price. We want to be in the biggest movers possible so that our capital is just used in the most efficient manner. So I use this gap scanner and then this liquid gainer scanner when I'm day trading. But beyond that, like I was showing you like this trender over MAs. This is like a great scan if you're a swing trader because what it's going to do is show you, and you can filter it in different ways, but what it's going to show you is stocks that are essentially trending. Why is that important? Well, as traders, our business is to be in the best stocks, but beyond that, we want to be in stocks that are trending, that are flying. A big misnomer of all trading is I want to buy a stock because it's cheap. Anybody ever done that? I want to buy a stock because it's cheap. I fell for that shit so many times. Pardon for the swearing. I fell for that stuff so many times in my life where, and it's an Indian thing too, but it's happening to all of us, right? Where like you see a stock and you're like, okay, this is cheap. Well, cheap gets cheaper, right? Like this Excel was like 35 bucks. Like, where's the bounce? Never, right? Never. It's a turn. Like this thing was at 38 bucks, right? Like when does cheap at some point get cheaper? It's a no buenos, right? Like, anybody remember CCIV? I saw so many people buy the CCIV up here in anticipation of the merger news. I was short this thing, meaning I was betting on it to go down because once news goes out, stocks always go down. So when the news came, everybody was buying it because they thought the news was coming. That means it's good. No, when the news is coming, it's bad because stocks already run before the news, right? The players are already in. So this thing's like a couple of bucks, around to 60 bucks. Right now it's dead. Cheap gets cheaper and cheaper and cheaper. Like I wasted so much of my life. I can't even tell you how many times buying a stock because I thought it was a good deal. I love a deal. But buying a stock because it's a good deal is different than right buying a T-shirt because it's a good deal. They always go back down, and it's very hard. Like this is gonna take. I mean, it's gonna be stuck for years. Could be right. You don't know, months, whatever it might be. Right. That's gonna be very, very. Don't buy stocks because they look cheap, especially like 30 stocks, like companies that are not real companies. Now, on the other side of things, so we want to be in the biggest trenders, right? So this is a great scan to be able to get you guys into stocks that are great trenders. Now, just because a stock is on this scan doesn't mean it's ready for a buy. So when a stock shows up on a scan, what it means is that you're going to follow it more closely to look for a trading pattern that indicates it could be a buy. So like this mRNA is something that I'm watching. So this is like had a big trend and it's pulled back. It's on the scan. Now it's got a level here that's building. You guys see this level? It's like at about 410, right? This seems like 414. There's like a little bit of a lid on it. So like if it gets over this level, that'll start the next run back probably into the 500. So it's essentially called like a flag. And you have a level there. So that's like a specific trading pattern, right? And this is for a swing trade. So if it gets over this, play this thing back, closer back into the 500s. Now, on the other side of things, like you'll see like intraday scans. So that's something that's like a little bit different. So like this Sava is something that was on our scan in the morning. Now, when you have something like this, right, this is like a stock that you're like looking to short essentially. So when you have something like this, you can see this like number 10 on the list. So like this stock in the morning, like it popped up essentially, and we have a very, very specific pattern. And this is a date. This is what's called a 2-day pattern. So a 2-day pattern is essentially when you have a stock that had bad news out. See this gap here? It had bad news out. Now the stock was already down like 40 points, right? So like there's not much I can do with it. But then what ends up happening is like the next day, see how like the stock, like it got tanked the previous day. So see how today in the morning, like the stock spiked up to 86. So it closed at 80, but it spiked up to 86 in the morning. So what happens is like a lot of times people are like, wow, like this, maybe the stock is going to bounce. It looks cheap. Well, cheap gets cheaper. Ooh, Solana, yes, give me 82 at least by the end of the webinar. I feel like a man. I'm just kidding. So when this thing gets up to 86, it's what we call a sucker's bounce. People start to buy it because they think it looks cheap. That's where we want to short. So like this thing, like once it started to kind of tank down, it shows up on one of my intraday scanners. And then I take the short on this. So I had like an 82.80 average. We ended up covering our last shares, meaning like getting out of the position somewhere near 70. So cool thing about like our classes, I trade live in front of my guys every single day. I trade live in front of my guys every single day. So like in the mornings, I'll put in a link for my guys, and I'll put a Zoom link essentially in the morning, and I start trading, in front of my guys. So like, I shorted this thing. It showed up on the scan 82.80, and then, man, I was holding this thing forever. Look at a good hour. Covered some at 76.75, covered some more at 72.70, covered some more at 70.90, meaning, right, I'm betting not to go down. So that's like, okay, I have a pattern, and then I have a scan. Now I make these things happen. But it's fun. Like I trade live in front of my guys every day, and we have a really good chat room. All these guys in here are trained by yours truly. So there's like no kind of riffraff talk of this or that. We're all with very, very certain purpose of what we're trying to do in the mornings and in the afternoons, which is essentially to make money trading trends.